inflation is potentially a huge problem and a huge threat, but in my view, it's not coming. It's just about over, in the sense that we've seen peak inflation as of now, and it'll start to go down a lot faster than people expect. Going back to April, in April, May, and June, I'll say even into July, I actually expected the inflation, as did a lot of analysts, and there was a reason for that, which has to do with what are called base effects. So you have, not to get too technical, but you have to know how the government calculates inflation that we all read about in the headlines, and they take it monthly, but they do it year over year. So April 2021 was compared to April 2020, May 2021 was compared to May 2020, and so forth. And that's just how they do it. Then they take the monthly year-over-year increase, they annualize it. There's a little math, but basically times 12, a little more to it than that, but that's basically it. And then that's the headline number you hear, up 6% or up 7%, et cetera. Well, if you look at April, May, June, July 2021, year over year, what was going on in April, May, June, July of 2020? That was the worst depression, worst collapse of the US economy since 1946. So yeah, not only, go back to 2020, prices are actually going down. So when you got to 2021, you would expect them to go up. That would be perfectly normal in a year-over-year comparison. There's some of the better analysts actually, so let's use 2019 as a base year because it was unaffected by COVID, but be that as it may, so we expect it. So the question was it transitory, in Jay Powell's famous word, or would it peter out? Well, you wouldn't find out until the fourth quarter of 2021, because if you and third quarter and fourth quarter, because if you go back to 2020, the economy was booming in the third quarter. That just as the second quarter was the greatest collapse, one of the greatest collapse, third quarter was one of the greatest increases. So that would tend to erase the base effects, and you'd be looking at something closer to real inflation or something that might be persistent. So there I would say when we got to September, October, November, even now we have some December data, that inflation has persisted. So it did last longer than I thought. But I'm sticking with the view that it's going to go away pretty quickly, and we've seen the peak. In last summer, I was a little uncomfortable because the Fed was saying transitory and I was saying transitory. But one of my thesis, the way I do a lot of analysis, is that the Fed is always wrong. So I was very uncomfortable being on the same side as the Fed. It's like, maybe I'm missing something if they agree with me. But Jay Powell has thrown in the towel, and they've flipped. So now they say it's not transitory, it's here to stay. So I feel much better saying it's transitory because now I'm on the opposite side of the debate with the Fed. Although I will say what Powell did was highly political. He got renominated by President Biden. Okay, that means you have hearings. That means you're in front of the Senate, and you're going to get grilled on inflation. So he had to get on the right side of the trade, so to speak, in order to mitigate some of the damage. That it's one thing to say you're ahead of the curve. It's behind the curve, rather. It's another thing to say you're still behind the curve. But he's doing the best he can. They said they're going to accelerate the taper. Yes. That implies that they're going to accelerate the liftoff, meaning the first interest rate hike sometime in late 2022. The market, at least the futures market, Fed Fund futures market, seems to agree. So he's sort of positioned himself for the political grilling, but I don't think he's analytically right. I think we're now, it did last a little longer than I expected, mostly because of gasoline and autos, but they're real things, you got to buy them. But now I expect the inflation to come down very quickly. So rising prices, here's what you have to ask yourself. Why are they going up? Okay. And is it sustainable? Is this something that's going to continue? It has nothing to do with money supply. Your typical Austrian economists, monetarists, who say, well, the Fed printed all this money and that's what's causing inflation. It's not true. The Fed has printed the money. That part's true. You can just, that's public data. They printed $5 or $6 trillion of base money. But they print it by buying bonds from the banks that, they pay for bonds with money that comes out of thin air. They get the bonds, put them on the balance sheet, and the banks get the money. What have the banks done with the money? They gave it back to the Fed in terms of excess reserves. So you're inflating, but you're increasing both sides of the balance sheet. You're increasing the assets and you're also increasing the excess reserves. But the money didn't go anywhere. That money did not get out into the real economy. For that, you have to look at M2, or M1, you have to look at what the banks are doing. Are they making loans? Are people borrowing money? Are the bank balance sheets blowing up? And the answer is no. They're just buying government bonds. And so, they can make money doing that as long as the Fed holds down the Fed funds rate or by extension, the repo rate. So the money's not going anywhere. That's not what's causing the inflation that we see. It is caused by really, really bad energy policies by the Biden administration. You shut down fracking, you shut down or you handicap fracking, you shut down new leases for oil and natural gas exploration on federal lands. You close the Keystone XL pipeline. You do everything possible to raise the price of gasoline because they want to promote the Green New Deal, wind and solar, which is ridiculous. So it's not surprising we have higher energy prices, and Putin's not dumb. He sees what's going on in the U.S. He goes, hey, you're shutting down energy production. Well, I'm going to shut it down a little bit too, just to raise the price because I'm making more money. So that explains that. That's not a monetary phenomenon. That's not because the Fed's printing money, which they are. It's because Biden has completely messed up the energy supply chain. Automobiles are also a big part of it, used cars in particular. The reason used car prices are going up is because you can't get a new car. Why can't you get a new car? Well, the answer is your car is really a computer on four wheels. They're full of semiconductors, all these monitoring and braking systems and engine diagnostics, and some of them are self-driving, navigation systems. They all need semiconductors everywhere. And there was a semiconductor supply chain breakdown. And if you can't get the semiconductors, you can't make the cars. There wasn't a shortage of steel or rubber for tires or glass or leather upholstery. It was a shortage of semiconductors. So that shut down new car production. So people say, well, I'll go buy a used car. Well, guess what? The price of used cars went up. So used cars and gasoline and fuel are components of the inflation indices. They're real. You gotta pay them. And that is why inflation is going up. But it's not a monetary phenomenon. It has nothing to do with the Fed. Well, inflation does drive gold prices higher. That's very clear, but it's not the only thing that drives gold prices. The best way to understand gold is think of it as a form of money, which I do. So everyone in foreign exchange trading looks at the euro, US dollar cross rate. Well, you should, because that's the largest, most liquid exchange pair traded in the world. Talking trillions of dollars a day. And when people look at dollar indices, DXY and a couple others, Fed index, they're like, the dollar is really strong. Well, it is. But you can look at the dollar price of gold, measured by weight, and think of it as a cross exchange rate between gold, one form of money, and the dollar, another form of money. So if you want a higher dollar price for gold, which gold investors do, and that's, then the dollar has to get weaker. So, but right now we're in a little king dollar episode. I mean, the dollar is crushing the euro, crushing the pound. So gold is not crashing. It's not going down a lot, but it's in a really tight range. But for gold to go up a lot higher, you're either going to need inflation, which I don't expect, or you're going to need a much weaker dollar. That will come, but not yet. So I would expect gold to kind of go sideways for a while. It will break out. It will break out to the upside, but not right away because the dollar is still king. I don't own any Bitcoin. I don't recommend it. I'm not some anti-Bitcoin. I watch it. I'm actually doing some writing about it lately. And by the way, I'm not new to the party. I did gold Bitcoin debates 10 years ago or longer. And I'm not a technophobe. I'm actually involved with cutting edge artificial intelligence, working with a supercomputer down in Florida. So I get it.